Hey everyone. Today I just wanted to quickly go through the treatment of tax in Australia and the process of dealing with your crypto returns. By the way, this is just information I wanted to share with everyone. This is not financial advice or any forms of legal advice. So first, I'll just give you an example. So let's say we bought the dip and Bitcoin finally mooned and we sold and we got a nice profit of 10K. So if that was all you did throughout the tax year, what you'd have to do, you'd have to pay $10,000 worth of income for that year. But let's say you also made a really sad 10K loss because you're just that good at trading. Well, since the Australian government is just so nice, this time they want to give you a nice pat on the head and say, there, so you can actually claim that capital loss against other capital gains. So let me be clear, this capital loss is not part of your income. Your income is different to money generated from investments. So anytime you buy or sell shares or crypto, that is the disposal and acquisition of assets. So in this case, you've made a 10K gain. All right, nice. Let's add that. So you've got $10,000 in income from investments, but oh no, you've also got a $10,000 loss as well. So in this case, you could claim that $10,000 on your tax, which would basically cut out this $10,000 gain because you've lost $10,000 and you've gained $10,000, meaning you'd paid no tax on this. But let's say you only made a $1,000 gain and you still had the 10K loss because you were just so confident in that coin on page 2000 of CoinGecko. So in this case, you'd have a $1,000 gain, but you'd also have a $10,000 loss. So what you could do in this case is obviously you'd still have to claim the $1,000 gained, but you could also claim the $10,000 loss, meaning you'd still have $9,000 worth of losses you could claim in the future. And unless things change, at the moment, you can keep carrying this $9,000 loss forward until you either go bankrupt or you kick the bucket. So you might be asking, well, what's the point of keeping this 9K loss? Well, in the future, if you do plan on making a capital gain, whether it be in stonks or crypto, you could use that $9,000 loss to not have to pay any gains until you've made more than that $9,000. Alright, now coming over to the record keeping, this is just what my accountant has told me to do. So my accountant said that the ATO requires the transaction date of when I bought or sold an asset, the amount of tokens or coins I sold, the price in Australian dollars terms, any exchange fees, because you can claim that on your tax, so you pay less in capital gains. And just to make my accountant's life easier as well, I decided to include the total, being the amount of coins times the price of the coins. So for an example, let's say on the 1st of January 2021, I buy 10 tokens of whatever token, the price is $10, and the exchange fee is $6.90. So the total, not including the exchange fee, because you can claim that later on tax, is $100. And let's say the next day, on the 2nd of January, I decide to sell my 10 tokens, and I sell it at $11. Well, in that case, I'd be up $10, but after taking that $10 and taking away the exchange fee both times, I'd actually be at a loss of $1.10. So I could claim that loss and save it for some time in the future for when I make a bigger gain. So I'm paying whatever I make in tax minus $1.10. But obviously these are just example numbers. You're obviously going to have different data. Now, one thing to note is that under the Australian government's eyes, if you hold an asset For 12 months or more, you'll most likely only have to pay 50% of the tax. So let's say you make a $1,000 gain, but you've held it for 13 months. In that case, you'd only have to pay $500 in tax. Now, I do recommend you hitting up the ATO and taking a read for yourself if you need to clear up any other information. If you like that video, consider leaving a like. If you want to have a chat, why not join my Discord server below? Okay, thanks, bye.